Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive and trading and kicking in 2026. Okay, so today, picture of the S&P 500. The big news of the day, in my opinion, is everybody's waiting on Warsh, waiting on the Fed meeting tomorrow. It's a big one. Okay, it's not really advertised, but this is the first meeting of Kevin Warsh. Okay, everybody thinks he's going to be a big hawk. Okay, we'll get to that soon in my thoughts going forward on Warsh, and we'll also talk about not just Warsh and what I expect will happen with the Fed meeting tomorrow, but let's recap some of the trades that we're going on that we mentioned yesterday and the previous weeks, see how they're doing, and to see what my outlook is going forward. Okay, so today, Tuesday the 16th of June, a down day. We mentioned that we might have a gap and go session. That this gap and go session is probably not going to be, this one right here is not going to be a gap and go session like it was here. Okay, this was just extremely unique. So I didn't think it was going to happen. Who knows what the future holds. I just don't think we're going to get such an explosive move, although I do think we trend higher. Okay, so first we always go to the technical picture. Technical picture here, guys, is still bullish. Okay, let's bring in the moving averages. We're trading above the 50 here in red. We didn't touch it yet, so we didn't get our optimal trade, which is, you buy the 50 retrace after a new high in the markets. Okay, we didn't really hit it, but it's close enough. So now we're just consolidating here. It's not over. Okay, this could, a lot of bears, because we've seen a lot of bears out there, they're saying that this could be a lower high before we head even lower. It's very possible. You never know. Let's get rid of the moving averages so you can see better. We'll see. I just think maybe we can go higher, and we can go lower though, cover this gap, and then go higher again. You don't know. Okay, so right now we know that the technical picture right here is bullish, so you want to remain net long as we are. Okay, and the sentiment, what does the sentiment say? Still in the fear. We're still at 39. We barely moved. We have plenty of room to go to extreme greed. The only thing that is extreme greed is the momentum, which means just the price action is near high. So yeah, but everything else is fear. And look, we said we want the breadth to come back. It's coming back slowly from extreme fear. Now it's fear. This is what we want to see. A lot of the things that we were mentioning for the past week or two are slowly on a day-to-day basis coming to fruition. Okay, we expect all these indicators to go back to greed and extreme greed, and then we'll get worried as bulls. Okay, but as of right now, we're still at fear, which fuels the rally further. Okay, we can fuel the rally further to extreme greed. So that is positive. The sentimental analysis is positive, and the technical analysis is positive. So that's why we're net long. Let's get to the big news of the day is waiting on Warsh. Okay, the reason why this market was probably weaker today, people were taking profits because they didn't know what to expect going forward with the new guy. Okay, here Fed Chair Warsh expected to withhold dot from central banks' interest rates. So they had all of these speculations occur here on market news CNBC, which is basically the pulse of the market. So there's going to be a dot plot update. Okay, that's the big news. That's not the big news. Warsh objects to the grind and other methods of forward guidance, so he doesn't want to do that. So all these are just little basic tweaks that mean absolutely nothing. Okay, and if you read the article, you'll see that we're not going to read it, but you'll see that basically everybody's slightly afraid that Warsh is going to be more hawkish than Powell. Okay, the Fed Watch tool. What does the Fed Watch tool say? Okay, so this is the Fed Watch tool for all of December. Okay, and it's basically what we had after the unwinding of the war trade, which it's still not, the memorandum of understanding on the war is still not 100%. Okay, so that's why we still have higher rates. Okay, so let's see the rate picture because of Warsh. We have this column here is 40%. So there's a 40% chance of standing pat. That means 60% chance of a hike, some kind of hike, whether it's one here, 42% chance for one, 15% for two, and 2% for three hikes by the end of the year. There's no way we're getting three hikes. I don't even think we might even get one hike. Okay, I think we're going to go down to an hike. It's going to be no change. I don't think we get a hike, even with Warsh. That is my opinion going forward. I think, okay, and I mean, what does the U.S. 10-year say? The U.S. 10-year is down today, okay? It went to the red zone and we said, short it, which means, buy the market. I don't think it gets higher. With this inflation, boogeyman off the table with a war ending, I think Warsh is going to be not the worst that people think he is. I think he's going to be dovish. I think he might even be more dovish than Powell. That's my interpretation. Why? Okay, it's, welcome to the new boss, same as the old boss. I remember back in the day when everybody was saying that Alan Greenspan, when he came in the 90s, that he was going to be a hawk because he loved the gold standard. Remember, the gold really mattered. It still mattered in the 90s. We were just 20 years into a fiat currency system, and everybody was thinking since the 1970s that eventually we'll get back onto the gold standard when Richard Nixon got off the gold standard in 71. And they were always saying, he always said it was temporary and we're going to get back. I think we get back eventually, but I don't know when. Maybe I'm dead then, but who knows. But they were saying with Alan Greenspan that he loved the gold standard. He wrote treatises on his thesis in his PhD was on gold. Okay, and how it's amazing and how we need to stay on the gold standard. Everybody was saying that Greenspan was going to be like that, like a gold advocate and a hawk on rates. The exact opposite. He was one of the most dovish Fed chairs ever, because whatever happens to you beforehand, or however you are beforehand as a upstanding member of society or academic, the moment you get on the Fed, you're going to be like every other Fed guy. You're going to be Bernanke, you're going to be Yellen, you're going to be Powell, you're going to be everything. So that's what Warsh is. I think Warsh is going to find an excuse in tomorrow's meeting to be dovish. He's going to say the war's over. We don't want to raise rates because, rates come with a lag. So if we raise rates now, the effect will be felt in a year. And, if the war's over, then we're going to be too tight in a year. It's better to err on the side of caution and keep things standing pat, that's what I think is going to happen. So today was profit taking based on that. Okay. So I just think he sounds dovish, and I think he just follows along with the Powell agenda. Okay. Without, X the hate for Trump. So Trump put him in for a reason, to be more dovish. Okay, so I think we get more of a dovish chair, or less hawkish. Let's put it that way, less hawkish than what the market expects. Okay, so it's not a good idea to look at somebody's past before he enters the Fed and think that's how he's going to be when he enters the Fed. After he gets the job, he's going to be like everybody else. Okay, so let's recap the trades of what we went through yesterday and past week. Okay, we always talked about oil, what was going to happen with oil with a war trade. And yeah, we said yesterday was down, but not that much. It was indecision. And today down even more, another 5% drop. We said we drew a line here to denote the low of this crash low before, and it penetrated it. It's probably bearish. This is a double top. We broke to the lows. We broke the neckline. We're probably going lower. And this is because we said that we're probably going to keep drifting lower as each day passes. And there's more and more certainty that Israel doesn't break the ceasefire, or the war starts again, or whatever, which it still could. But if we keep going day to day and nothing happens and peace is approached and the memorandum of understanding is signed into quote unquote law or a treaty or whatever, oil is going to go all the way. I think we go down to 65 and even lower. We hit the 55 because now the world is awash in oil. Okay, the Strait of Hormuz are open, plus Venezuela production, plus U.S. production, plus. Okay, so I just think we're going to go back to the fundamentals of oil, which are generally bearish. Okay, so that's what I think in the oil market, which is basically good for the market. Low oil. Trump, I think, is going to get what he wants. Low oil. Okay, it's going to be. I don't know how he's going to fare in the midterms, but I think he's going to get his low oil wish come true before the midterms. Okay, we also had. We mentioned semiconductor index. That's how it's hot. Remember yesterday we mentioned that as it broke into new highs, we had serious negative divergence, which is negative, and it's playing out today on the SMH. I don't think these guys lead going forward. I think we have some kind of weakness in the sector, and I think the negative divergence plays out. So I'm not really excited about this sector. And I have Intel. I still have an Intel short going at 88. Plus credits about 96.50. 96.50 is my shorting price. As it goes lower, I'm either going to get out underneath that, or maybe short a put. I haven't decided yet. Okay, I just like I like to have short exposure in this sector right now, because I don't think it outperforms massively going forward. I mean, a lot of the hype is in. You have crazy moves in stocks, and especially Intel, which shouldn't be this high. But you have, this is why I mean, nobody knows what the future is. I'm just playing this negative divergence and the fact that we've had a huge move in this index with, not really a big pullback. We have to bring in the moving averages here. We have to at least touch the 50. Okay, so this is what I think. I mean, if we touch the 50, probably a buy. Okay, this is still bullish, but I just don't think short term it's going to continue to move higher. Okay, so probably bullish in the mid to longer term, but in the short term, because of this divergence and because of the huge move, I think we go down on the SMH. Okay, what about gold? All right, we have this. After this, we mentioned it 1,000 times. Okay, gold always looks the worst. Always looks like it's breaking down. Look, it'll have the worst chart of all time. I keep mentioning I've traded this sector for 2 decades. Okay, it broke the 200, then it started selling off. Oh, this huge down move, even more. We have oversold conditions. Everybody hates this sector. Okay, the moment it looks the worst, it rebounds hard. Now we're not out of the woods yet. We have to go above the 200, and then we can confirm it. However, we did note that, remember the bullish percent index? Okay, the bullish percent index hit 0, and that's when we were buying. Well, today, I don't know if you guys can see it, but it's at 22.26. So in 3 days, from 0 stocks having bullish patterns in the point and figure charts, now we have 23% of the stocks having bullish pattern, and it's all the majors. It's all GDX. Okay, GDX recovering above, close. It's at the 200. We don't know if it's going to go above, but GDX is leading now because now this is above. If it continues, the majors, and it, how can I put it to you guys? If it closes above the 200 and stays there for like a week or two, very positive for this sector. Okay, which I like. So again, gold looks amazing. I mean, it doesn't look amazing. It looks still negative downturn, but we mentioned before, whenever it hits 0, okay, it's tough to see because it's really at 0 here, and you can't see the fluctuations from the previous months. But ever since it goes below to the single digits, okay, you have a washout, a move upwards afterwards, like a weekly move upwards, leads to us getting into the 50 to 70% range. Okay, we're at the 22. That means 22% are positive. We want to be at 50 to 70%. And I will say this above panel here shows the price performance of the gold miners versus the stock market. Okay, and I want that to go above 0. So if this goes above 0, which means the stocks in the GDX are, gold miners, the majors, are performing better than the general market stocks, and that's when I would look to unload along with a move to 70 here. Okay, it's going to take months, weeks to months. Okay, so be prepared. This is a longer term trade, but it's we were at the depths of despair. The depths of despair here, and that's when we were buying. We were buying in tranches. Okay, so not out of the woods yet. We still have to go above the 200 and continue. It could even go trade between 42, 400 for a little while before breaking out like later in July, August. You don't know. Okay, you have no idea what the path is. You just know that now we've had a washout, and generally speaking, when you have a washout in this sector, while still in a bullish pattern, you want to go with the trend. Okay, and that is long. Okay, so that's it, guys. Warsh tomorrow. It's a big move. It's a big meeting. His first meeting is going to set the tone for what to expect going forward, and I expect he sets the tone as dovish or not as hawkish as everybody thinks. Okay. So looking forward to the meeting tomorrow and see what happens. It's going to be volatile. All right. Later, guys.